Hopefully guys are doing well out there. It is time to wake things up a little bit and talk about SBUX Corporation, ticker symbol SBUX. The company just came out with their Q1 earnings after the bell today. Stock reacted very negatively initially. Shares were down 2.6%. They've rebounded slightly in the after hours, although they're still down just marginally. Talk about the revenue growth. We'll also look at this from a traditional valuation perspective as well. Look at it from a price to sales, see if we've seen some pullback on this one, because when you come over here to the chart of SBUX, this stock, like a lot of stocks, was actually peaking pre-health situation coming to shore here in the United States. The economy here in the United States, and quite frankly across the world, was absolutely booming back in late 2019. And then obviously we all know what happened in March of 2020. You had shutdowns, which certainly impacted SBUX as much or as any business out there. This stock bottomed all the way down here to $50 per share in March, and then promptly went on a monster rally all the way up to about $125 per share late last year, and then all of a sudden has pulled back and essentially given away all the gains you had before the previous highs back in 2019. Stock sitting right on it. So does that signal a buy? Does it signal that this stock could go lower? Talk about that here in a moment. Now let's talk about these earnings. They came in at $8.1 billion. You have a revenue growth of 21.4% on this one. Not too bad, right? Okay, but what was impacted over at SBUX is you did have EPS impacted a little bit. That missed by about 8 cents. And that has investors concerned a little bit, probably more due to inflation. Obviously, this company has a lot of employees. It has a lot of input cost in terms of their products, and certainly inflation and transportation and all those types of things can really impact SBUX from a raw material and an employee perspective as well. Now, let's take a look at this from a traditional valuation perspective. I got price to sales here, a 10-year chart on that one. And what we've seen is this stock has peaked more recently up over 5, even closer to 6 times sales, but it has valleys all the way south of about 3 times sales. In fact, this one's gotten very close to about 2.5 times sales. I would say that's probably your bargain basement valuation. Obviously, we see in March of 2020, I think you could draw the line on those and say, hey, things might not get any worse than a global pandemic hitting the shores of the United States and certainly closing stores and having people stay at home. SBUX is essentially kind of in the middle of that range, close to 4 times sales. So I don't think you're getting a screaming hot deal on this one. If it were to pull back even further, that could trigger much more of a value buy, but you're not paying a huge premium for this one like you were just a couple of months ago. Now let's take a look at these revenues and the profits on this profit and loss statement. We see our revenues up 19.3%. We went from $6.75 billion all the way up to about $8 billion in sales. Now, what we want to monitor is how the costs are inputting over at SBUX. So we've got our total operating expenses here that came in at $6.9 billion, up about $1 billion from last year. That's up 16.8%. So we got our revenue growth of 19.3. Our operating expenses went up by about 16.8. I did notice in the previous period, we did have this restructuring and impairment. I wish they would have maybe separated this out, because you see here our cost in terms of our percentage of revenue, we're at about 85.9 or roughly 86%. Last quarter, they were at 87.7 on a yearly basis. That does include this impairment charge of $72 million. Now, it's a small number, but all things being considered, this company's actually done a nice job in terms of controlling their operating expenses, because when we come down here, we take our revenue of $8 billion, we minus off our cost of $6.9 billion, we come down here to operating income of $1.17. Last year, we were actually south of $1 billion at $913 million. This company's done a nice job of controlling that, and that does appear to be, at least comforting to some investors. Now, from a balance sheet perspective, stock looks pretty nice. We have burned through a little bit of our cash, went from about 6.4 or close to $6.5 billion worth of cash down to about 3.9. When we get over to the cash flow statement, we'll see where some of this cash must have gone. We do have a little bit more in receivables. We also have about the same in inventory. So you like to see that with this company. They've done a nice job with that. In terms of the debt over at SBUX, they have about $200 million current, no problem. They have plenty of cash on the balance sheet. Long term, they've got about, they went from 13.6 down to about 13.6. It's basically the same. Some of it looks like it's got rolled over here to the current side of that. Now let's take a look at cash flows, because we talked about how some cash burned out of the company. We pulled down our net income right here on the left-hand column, 816 million, really strong net income for the quarter. But once we do our add backs and our deductions, we see over the last year, stock's basically flat from a cash flow perspective. So I'm thinking to myself a little bit, that's kind of what investors are thinking, right? We talked about how the stock is basically flat. It's up just 1.56% over the last year. And then when you look at this chart, it's basically back to the highs that we made back in 2019. And I think that's kind of what investors are thinking. Look, we had $1.8 billion of positive cash flow last year. Now we've got about 1.8, close to 1.9 billion of positive cash flow this year. What has increased is some of our investments. Addition to property, plant, and equipment went from 324 up to 416. We see that in terms of our net cash used in these investing activities, we went through 272 million last year. Now we went through 401. So our cash flow basically stayed the same, but we burned through a little bit more cash here. In terms of the investing side, here's where most of the cash actually went to. It actually went to repurchase of common stock. So if you like buybacks, you like the effect that that might have on Starbucks, well, I tell you what, you got to be comfortable with their use of cash over the past year or so. Most of it actually went to stock buybacks, all things being equal, over at Starbucks. And including that, we burned through about $2.5 billion worth of cash. That's when we looked at this balance sheet. We saw this decrease in cash. The vast majority of that actually went to buying back the stock. So not necessarily the worst thing if you're a shareholder of Starbucks. But when we look at the stock chart, we see that the stock has literally gone nowhere over the past basically 2 years. Now, the stock was locked in a major uptrend. It broke like a lot of stocks. This thing broke either late last year. We're seeing other stocks kind of break a little bit later than this one did, but it's kind of broken down, and now it's hovering at an area that makes a little bit of sense, but it's hovering underneath an area of support. There's an area of support for the stock here at $98 per share, or roughly $100 per share. It's acting as a little bit of a resistance. This kind of level where this stock is can make investors either excited or a little bit nervous, depending on how you want to look at this. If you're bearish Starbucks, yeah, there's a lot of room for this stock to move down, okay? If the sentiment in the markets get negative, yeah, you've got some areas where you could just slice through these areas of consolidation and come down to maybe $80, $85 per share. Now, on the bull case scenario, you're looking to really get back up, I think, solidly up above $100 per share. So you need to put some kind of green candle up above the area where we're at right now, and then it takes you back up into these highs. So I would say really your upside in this case would be back to it could be back all the way to the all-time highs at 125. My guess is you'd meet some resistance somewhere closer to 120, maybe even a little bit lower than that at about 115. So you do have some upside in this one, but again, my guess is you would meet some resistance. My call on the stock market is we are seeing a lot more volatility right now than certainly we did after March of 2020, okay? Stocks got super volatile and they went down, but pretty much all of them went straight up after that. My call for the stock market over the next, at least the next couple of months, while you have a lot of macro environments, also stocks pulled forward just a massive amount of gains and a massive amount of price action, I would assume stocks start going sideways. It's possible with Starbucks, you start consolidating between 100 and to the upside up to about 115. To the downside, I think you've got areas down here between about 85 and 98. Your risk reward on this one is roughly equal. So all things being considered, you do have a dividend on this one, about 2% yield. So as this one pulls back, then you could have people buying this for that $1.96 dividend. It continues to grow. Every year, Starbucks tends to add to this, because when we look at the earnings over at Starbucks, we see in the most recent quarter, the company earned 69 cents per share and they paid 49 cents for a dividend. This company's paying out quite a bit of their earnings. And that could have some investors somewhat concerned, or at least somewhat nervous, right? And notice over here last year, in a year where they had a lot of disruption, they earned only 53 cents per share diluted and they paid 90 cents per share on that dividend. So look, this company has to continue to grow these earnings. They did in the most recent quarter. They pay out a large percentage of their earnings to you, the investor. So that can give you a little bit of cushion, and that can provide a little bit of cushion underneath the stock as well. And certainly how that buyback shakes out, how much money they have left on that, that can create a little bit of cushion underneath Starbucks shares. Look, I would not expect this one to rocket back up to the moon. This is a stock with already a valuation that makes a lot more sense than it did a couple of months ago. And I would consider Starbucks just kind of, I wouldn't necessarily call this a safe stock, but probably a steady stock is a better way to put it. And certainly inside a portfolio, there's room for those types of stocks, especially ones that pay a dividend like this one. That was Starbucks. Let me know down in the comments what you think about this one. We'll talk to you again soon. Good luck with your investments.